Hello everyone, welcome back to my channel. So today I want to chat with you guys about YSG stock. So since last time YSG stock has been dropped significantly, and I personally bought the shares around $13 because I thought it's already dropped a lot from $18 to $13, but then it dropped further to $9. Currently it's around $10. For my stock performance, it's negative 30% for now. And I bought around 1,000 shares. So I definitely keep an eye on this stock, and I check their latest update. Today I wanna give you guys an update about the stock and also talk about my thoughts, whether I will buy, sell, or hold the stock. So now let's get started. In the latest report about the company's annual performance, the company's revenue has grown around 72%, from 3 billion to 5 billion RMB. Because the company used direct-to-consumer model, which they called it DTC, their DTC customers also grow about 38%, from 23 million customers to 32 million customers. In last year, in order to increase their market share as well as their customer base, they also opened a lot of new stores in China. At the end of 2019, they only have 40 stores nationwide, but at the middle of the 2020, they already grew to 147 stores. So the store numbers in China has increased more than 3 times. So although the new open stores can bring them more fixed costs, but they can also increase their brand awareness and to get more attention from the potential customers. Another thing that is significant happened last year is they made 2 acquisitions. The first acquisition is Galenic, which is a French skincare brand, and they bought it from the French pharmaceutical and cosmetic group. And the other acquisition has been pretty shocking, in my opinion, is in March 2021, they bought the brand Eve Lom. So Eve Lom is a prestige skincare brand. Their product is very expensive, and one of their star products is a cleanser. It's around $100 to $200 per jar, and they call it the Hermes in the cleanser field. Although the company didn't provide more details about their acquisition cost, but we can have a sense the acquisition of the prestige skincare brand should be pretty expensive. So why the stock price has dropped so much? Although if we're looking at their gross margin, which is around 64%, which is not bad, I think the main reason is that their spending growth has been exceed their revenue growth. So that leads to that they have a huge loss last year because of the merger and acquisition they did, as well as the offline stores they have opened. While their total revenue increased around 75%, their total operating expense has increased more than 115% from 2019 to 2020. So that leads to, so they have a net loss of $400 million US dollars, which is around 51% of their total revenue. That means if they earn $100, they lost $50. So when we look at their financial statements, it's definitely a bad financial statement in terms of the company net income side. After the stock price has dropped a lot, my thoughts on this company or the stock still stay the same. I also mentioned in my previous video, so there's several rationale. The first one is that China is the world's largest beauty market, and it will grow additional 29 billion between 2019 and 2025. So in the next 5 years, the growth rate of the color cosmetics is around 14%, and the growth rate of skincare is around 10%. In this fast-growing industry, that's why I think there's a lot of opportunities for these companies, especially they are the industry leader. And the second rationale is that in China, the per capita spending on beauty products is relatively low compared with other countries Like in China, it's only $27 per year, but in US, it's $96 per year, which is 3 times comparing with China's consumption. And in South Korea, it's 152, and in Japan, which is the highest, is $184 per year. That's why I think there's still a lot of space for the company to grow. So after talking about the industry, as for the company, I think they already like make the business strategies, have different brand from prestige to the mass beauty. So in the mass beauty side, they already have the brand like Perfect Diary, Little Oting, and Abby's Choice. And in the prestige side, they have recently acquired Glenik and Eve Lom. So I think those comprehensive product line can help them acquire more market share. Because the company also use DTC model, they can receive the data from the customers directly, like what product is needed mostly from the customers. Recently, they also launched their color contact lens, which is because driven by those consumers. So last but not least, I want to compare with its competitors in the industry. So 2 of the competitors I think we can take into consideration, it will be Coty and Estee Lauder from US. So when we look at the PS ratio, YSG is 8.52, while Coty is 1.75 and Estee Lauder is 7.95. Because YSG has such a high valuation, so even though the stock price already dropped around 30%, the PS ratio still looks higher than Estee Lauder. So we can see that the market already pricing its high growth rate and give it a pretty high valuation. And as for the market cap, YSG's current market cap is 7.3 billion, comparing with Coty is 6.9 billion and Estee Lauder is 112 billion. So we see that YSG has been catching up quickly with some beauty conglomerate like Coty. It still has more road to go and has more space to grow. As for the debt to asset ratio, YSG is 17%, Coty is 80%, and Estee Lauder is 78%. The reason that YSG's debt to asset ratio is relatively lower is because they don't have their own factory. They use a third-party vendor. So that's why they can use this low leverage model and use the money they saved on the factory and put it in the marketing and promotion. And last but not least, as for the net income, YSG has a negative 400 million last year. Coty has negative 1 billion last year, and Estee Lauder has the positive 696 million last year. So we know that last year, due to the COVID, the overall performance in the beauty industry has been decreased. And this year, because we gradually all get vaccine and gradually go back to work, so the market has been gradually recovered, and I think those beauty stock will bounce back. To sum up, I think the fundamentals of YSG has not changed much, even after the big acquisitions as well as its new store opening in China. And I'm still bullish on the stock in the long term because the company is a leading position in China's beauty market, and they are backed by a lot of famous capitals. And I also checked the Insider Monkey website that a lot of hedge fund has newly opened a position on this stock, including the Tiger Capital Management, Hill House, and some other hedge fund. So my strategy right now is that before their next earnings release, I will not add more positions. So I want to hold my positions for a long time, and I would expect the stock price will grow back. So yeah, that's all about the YSG stock update. Hope you guys find it interesting or helpful. So I will see you in my next one. Bye.